Hello, good evening, ladies and gentlemen. Welcome to our fireside. We're going to go over real emails, go over the week, talk about the trades, maybe even throw in the Super Bowl and talk about a little more. Some big things that have happened. We're going to go through it. Maybe a little earnings, maybe not. We'll see where the night brings us. I am Mark Melnick. This is the Newsbeat Show. Yes, please pause and read this slide in within its entirety and then hit play. Thanks. Appreciate you reading it. All right. Um, where do we start? First of all, um, I want to thank people in the Newsbeat live room. I feel so humbled. I feel so blessed that I was able to have the best week that I can remember offhand, off the top of my head. Best week I've had. Trader top whatever 3, 4, 1, 2, 3, 4, 5. I don't, wherever it is around there. So thank you to the Newsbeat live room. I appreciate you. All right. So with that being said, why don't we just go right into the love of things? So everybody is talking about the Super Bowl, right? Who's gonna win? What are the odds? I mean, pretty much, if you're not rooting for, I mean, if you're betting, you're betting, but if you're not rooting for the Tampa Bay Buccaneers, that is like, what an a-hole. Like, are you kidding me? Like, you don't have to like football to like root for the Tampa Bay Buccaneers. Unless you're like from Kansas City or you just really coincidentally happen to be one of those people who live elsewhere who's always been a Chiefs fan, then that's fine. You aside. But I mean, come on. Come on. I mean, just looking at this game, um, you know, Tampa Bay Buccaneers are the underdogs across the board here. Even on DraftKings, FanDuel, BetMGM, PointsBet, Unibet, you name it, they're across the board. But honestly, who gives a crap about football? I don't. I'm a Jets fan. What do I look forward to? Being a Jets fan is kind of crazy. You're just looking at your team saying, "No, don't score. We need the number one pick. Stop! Stop it! You idiots!" That's like being a Jets fan for the past decade, just so we're clear. So, hasn't been a really fun ride from there. But with that saying, um, you know, people, I almost feel like DraftKings is like one of those obvious bets where you could obviously clearly see it. It's up after hours right now. I mean, it stopped trading at 8 o'clock. It closed up, 40 cents after hours. Fine. For me, I want to explain, like, I went ahead and I did Rocket overnight as my Super Bowl trade. And again, if you're in the Newsbeat live room, there's links in the description. We get you this stuff in real time. I took Rocket. They're going to have a couple commercials on Super Bowl weekend. I think it's going to be a hot thing because, look, everybody is working from home now. Most people have a lot of value inside the home they're living in. So looking at, taking a potential another mortgage, I speak to people who just absolutely love this company and others. And look, it's a very interesting company. Stocks up 20 cents at the moment after hours. We'll see what it does. But yeah, Rocket RKT was my actual Super Bowl play. I know I'm coming to sort of as Captain Hindsight here, and I do try to get you other trades that are more actionable in real time, but something I'm going to watch Monday as well, of course. We're going to go straight into the S marks. Yes, I am the only guru on Wall Street that currently, hopefully there'll be more in the future, trust me, I root for it, we'll go over raw emails. What do I mean by raw? I mean untainted by the slimy grips of saving a false mirage of a personality. Like, there's Unfortunately, we live in a world where people in my position, they just try to only show you the good. Like you come to them, you look at them, they just seem like bulletproof. And everything they offer you is bulletproof. That's not me. I take raw, random emails, and why I have the ability to do this and do well with this is because, from what I see and from when people vote, the vast majority of my room is consistently profitable. So I'm going to go through the emails. What I do is I copy and I paste their email while ignoring their name, um, without like highlighting their name at the end of the email, and we go through it. So let's start at the top and work our way down. Hi, Mark. Thought I'd share a spreadsheet that I've begun using to track my results. I still would like to add a ton more information to make my results more data driven, but this is a good start. What's been working well for me lately are the Mark 1 and Mark 5 strategies and then the Know Your Limit strategies. Keep in mind, all these strategies are free to members of the room. We don't charge you for strategies, we don't charge you for education. We think that's one of Wall Street's biggest scams because 98% of people who take any educational course will fail. That is not the case for people who take this education. Guess what? And you also don't pay for it. Really? You know what they say? You get what you pay for. That's the biggest load of bullshit I've ever heard in my life. You don't get what you pay for unless getting having somebody flip the bird and rob you in your pants, your wallet, ding, rob you is what you pay for, then maybe you do get what you pay for. But no, you don't get what you pay for on Wall Street. That's bullshit. That's a lie. That's a total lie. But the Mark 5 and Mark 1 with a nice early front run has been awesome and continues to work. Front run's also a strategy we do. The key is an early front run so that if it goes against you, you can sell quickly. And if it goes in your direction, you can sell quickly. And if you wanted a piece out of the trades with some runners. From looking at these, I can correlate my increases in my trading performance with certain time activities. For example, in November, I got a new computer and a new monitor. It helped tremendously and made me realize the equipment you use to trade is a huge part of the picture. Focus on getting a good trading setup, and the more data you have, the more you can learn and improve. That's it for now. Thanks, Mark. Appreciate you, my brother. All right. All right. So interesting. He puts in his largest. He puts in right here, and I guess I'll just print screen it so everybody can see it. I'm gonna blow it up for you guys, so don't worry. Don't sit there, squinting at your screen and whatever. So I'm gonna show you the gist of it, and then I'm gonna go through the other months, see what he has to say because I'm pretty sure it's like impossible to read, but look just like that. So he talks about the number of winning days and losing days he has. So you see in October, winning days versus losing days, he was profitable 81% of the time, 81.8%, followed by 85, followed by 81, followed by 68%, followed by, I guess, just making money every day this week because he just batted, 5 and 0 for February. He shares his total monthly profit. Um, Pretty good, pretty good. This is, definitely the signs of consistently profitable trader from October till now in the Newsbeat live room. What are you up? 317, 400, a little under $500,000 in 4 months in a week. You're up $500,000. And and I like also here he talks about his average daily profit as well. But look at this. Largest win, largest loss. That's scary as shit, bro, because I look at this. I mean, I look at that and I look at that. Honestly, like these, I mean, that's just part of the game, I guess, for you. I would shit a brick if I had numbers like that personally. Like, you know, on the largest win side, though. But look, like now, look, obviously he's doing much better than he was. But when he had that bad day, I'm just wondering if this bad day right here was like a tilt. And this bad day was a tilt, and this bad day was a tilt. I just wonder. Like this obviously looks okay. This obviously looks okay, but at the same time, right over here is a $57,000 day. Right over here is a $24,000 day, and I guess you made 41,000 this week, trading 5 and 0, utilizing the methodologies. Okay, so let's see what else that he gave us here. So, all right, so he explained his P&L. He shows his daily P&L. You could just see all the green versus the red. Interesting. Ah, see, I was wondering, so it wasn't until you got crushed on Goldman Sachs spreads. I can't stand trading the banks. So that was the day where he lost his 17,000, but look how you followed it up. You followed it up with 7 trading days, which just, quick napkin math, you made well over $100,000 after that. So, I mean, that is one F of a bounce back. You probably felt like shit on December 21st. Probably felt like shit, but after this, you came back real hard. You got right back on track. And that, I almost feel like that is part of the, I almost feel like that's part of being a consistently profitable trader. Just the abilities to bounce back. I got just the ability to bounce back. So, well played. Thanks for sharing. I mean, you had a $57,000 day. That's just so sick and great. And yeah, keep up the good work. The next email just says screenshots regards with no screenshot, and it says P&L. So I'm just gonna delete that email and pretend I never got it because there's nothing there except for like 4 or 5 words. Let's get to the next email. So overall, he's pointing out the strategies that work best for him, the Mark 1 and Mark 5, and then the know your limit strategies. That's pretty much where I am too right now in the market. And just so you understand, just for those watching right now, you have to understand that certain strategies in certain market conditions are more effective than others. When you take these educational courses and they say, and they try to teach you everything, this is what a candlestick is, the buyers are in control, this is how you draw a trend line. First of all, nobody in the industry really knows how to draw a trend line. I always find that, except for the algo and the quant guys, only them, only the black boxes. All these traders, none of them draw trend lines correctly. A trend line is meant to be able to accurately call the bottom or top of a range. It's not used as an estimation. And I think that's a big problem that people have with trend lines. Your trend line should be mainly effective for your trading. It shouldn't just be some random line just to draw. And you know, sad that that's what the industry turns into because most people don't feel they need to make money every day. They feel like, all right, I just need to make a lot more on the good days as opposed to when I lose. Yeah, but you should probably be batting around. I mean, really, once you really understand yourself and you overcome your psychology, you should have between 0 and 3 down days a month. Doesn't mean you're doing bad, just means I think you can improve if you're not there yet. Hey, Mark, I'm planning to paper trade for at least a month, just so I can understand the workflow and strategies. Ding. My question is, what are the main lessons, concepts that should be pulling from my paper trading process? You should figure out what you do best. Find a strategy, apply it in your paper trading, record it, see what you do best. I give you a bunch of strategies that work for a lot of people, myself included. Try those out. If you have something else, define what it is and record it. Right now, your only goal, and I tell this to people because I almost feel like we live in an environment where people just try to, people just try to vomit what they do. It's like, oh, do all these strategies, this. You're all unique. I love the shitty services out there, and it's a Friday night. We're all having a good time. So yeah, this is rated PG-13. Yeah, I might use the word shitty or crappy or a-hole or something like that. Okay? All right, it's a Friday night. Kids are asleep. Taking off, I'm taking off the filter. I'm talking to you like I would talk to you in person. And I think part of the problem is so many people out there try to shove what they do down people's throats and tell them to like it. And they wonder why 98% of the rooms fail. I mean, look around you. Here, there, everywhere. No, yes, that trading room too. You might like the service, you might like the person, you might have a hot streak, you might have a cold streak, you might have a hot streak, you might have a cold streak. 98% of those people fail. 98% of traders fail. Okay? And people don't like the truth. People get offended. We live in a culture now where talking about the truth is very offensive to some people. Very offensive. Not seriously, like really, like very, very offensive. And I can prove it to you. I can prove it to all of you. You want to find out how many people are succeeding and failing around you? Ask your guru to run a poll. Ask your guru to run a poll. All these trading rooms have the ability to do it. They won't do it because they're scared shitless of the crappy, massively subpar number that will show up. They don't want to admit that a large part of their portions of profits come from you wanting to sign up for a service. So it turns people in my position to try to be Superman and try to never show somebody struggling. I guarantee you I'll have emails of people struggling, just so we're clear. Like, I have no idea what emails are coming in because I don't vet them because I'm not a bullshit artist. See the difference? I'm going to go through them in real time with you. So, I'll prove it to you. Go to your guru right now, any service you're in, and just simply ask the following question. Say, are you finding tremendous P&L consistency with my plays? Not today, not how are you doing this today, not how you doing the past week, not are you having a good week? No, 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 no. Generalize it. Generalize it. Are you finding tremendous P&L consistency with my plays, my service? Yes or no? See what kind of numbers you get. 98% of people fail. You see this number? Nobody in the industry will pull this number or anything remotely close. Why? This is me showing you the power of what we do here. This is how I boast. This is me boasting. My boast is saying, look at all the people successful around me following this service. Not, oh, here's my P&L. It's always easy to look good there, right? So what you should be doing now is figuring out exactly what you do best. Period. That's what you should be doing. Nothing else. It might not be what I do. It might be exactly what I do. I don't know. Only you can answer that. And that's what you do. Start recording down the strategy, your hit rate, your P&L, everything. And then your numbers will tell you what's up. Not me, not you, even. Your numbers will tell the whole story. Hi, Mark. I joined your room about 2 weeks ago, and I felt more disciplined around my trading. Huh, so we have somebody new here. Um, and I've become much faster at taking losses. I'm usually 70% right in my ideas and do well, but will always have a few good days green and then get smacked down, which takes me 5 steps back. That's very common in the industry. So you're doing well, you're doing well, doing well, then you get punched right in the face. I would say your way of thinking and being patient from a mental perspective has helped. I trade with my channel analysis system I have created, and then I focus more on your so-called triggers. Okay, my so-called triggers. That's a funny way of putting it, actually, because my triggers can be defined algorithmically on volume, meaning when I have a trigger, algorithmic volume will come at that level, whether I'm in any name in the market at any given time, as a very accurate generalization. But we'll go on. Your focus of triggers has helped me be more patient. I crushed GME, so patience, key trigger signals, and focus on a few names helped. All right, you've been here for a couple weeks. Let's see what's up. All right. I mean, this isn't. I guess this is a couple weeks. January 25th. So yeah, that's 2 weeks, $12,000. And look, that's 18% of your account. So you really beat the shit out of the market, didn't you? Good for you. Trading, look, not even the biggest account in the world. Look at the names he's trading. GME, Tesla, Nvidia, Amazon, Tesla, Amazon. These names are not hard to trade. Airbnb, GME, Amazon. Look at all this. Lovely. Well done. Well played. Um, well played. Okay. Let's moveth oneth. Hey, Mark. Happy early birthday. Hope you have a blessed day and a good weekend with your family, both in this room and in your home. I had a rough week of trading. First red week, and I don't know how long, months probably. It really started last week with the trading platform starting to mess up due to the GME mess. Wednesday and Thursday were losses. I made most of it back Friday, so it wasn't a big deal as far as the P&L, just more mentally. I haven't had many losing days in a long time. On top of that, I've never had to deal with trading platform issues early like we had this week before. I know. With all so many platforms had issues, a lot of the prop firms out there tried to step up and say, "Hey, we don't have issues," which is a very valid and fair point. Because Fidelity always works great for me. So, all right, so you're having Fidelity issues. It wasn't just Fidelity, it was many more platforms, as you know, Schwab and others. This was the first time, and it definitely turned me toxic. I tilted and overtraded and didn't size down on low conviction trades because each trade was going to be a breakout that made back the money I'd been losing. Trades I would have scalped for a quick 10 cents became trades I was holding and letting them turn red. At the end of January, I had been trading great. It all seemed easy. This last week happened. Like a lot of people, I couldn't trade for 15 plus minutes each day. I know this whole Wall Street bets thing totally effed up all the platforms. I feel you. This is an anomaly. Obviously, it's not something that you'll always see. It's something that really there's no precedent for what has happened on Wall Street Bet. There's nothing that you could have compared it to in the past. So just keep that in mind. From Wednesday last week to Wednesday this week, Monday and Tuesday this week were the worst. I was down for so it was this week too. See, we didn't have that many problems this week on Trump. There were problems, but like they went away rather quickly. You, I was down for 45 minutes to an hour each day and missed a lot of the early moves. When everything got back up and running, I choose to Rambo in setups that I shouldn't have even played or that weren't high conviction. Until today, every day this week was a five. Until today, every day this week was a five-figure red day, one or two even over 20,000. Each day I lost, I felt like I had to make it back the next day, and that number I needed to make back kept getting bigger. To make all this even more toxic for me, this was the week I told my boss I was leaving my job. This is the problem here. And we're going to talk about the psychology of this because that's the answer. But I'm going to finish the email first. So I felt extra pressure to have a good week. Of course you did. Instead, I had given back most of my gains from January. I was visibly frustrated with it. My wife noticed and we talked about it and we agreed that I was overtrading and that there was no reason for me to feel pressure to have such big days like I had been having until this week. I just needed to trade smart. Make it about each individual trade and not about my P&L. Amen. I started seeing my account grow faster than it ever had and faster than I thought possible. But she and I agreed that when that happened, I started focusing on the money I made each day and not making good trades, taking what the market gave me and locking in profits early. After the chat with her, I came in with a clean mind today and had a great day trading Zoom and Tesla when they popped. I didn't overtrade and I locked in my profits for a good $25,000 green day. The fact that I don't have time to chat in the room as much or sit down and think to write an email for the nightly Ask Marks has been hurting me this week too. For good reason, though. My wife wants my focus on the boys and her more at night and not get distracted as much as I can during the show. I'm working on a way to fit it in though I trade better when I'm using the room more and talking to people. After my last day at my soon to be old job, I will have more freedom to engage the room more and write emails, but for now I'll just have to listen to them after the fact. Before today, I was feeling really down, second guessing myself and everything, but I came into it with a clear head and did great. It's crazy to think that after having 6 big red days, I'm still very solid green for the year. I need to forget about the new big P&L size and just can't keep trading smart. Sorry for the long email. Apology not accepted. You don't need to apologize for that. I just wanted to remind people who may be breaking out and seeing those big numbers, don't lose sight of what made you that money. Stay mentally strong. Otherwise, you're just trading with borrowed money. Amen. And you'll give it all back. And for anyone who has down days, they still suck just as bad when you're making more money and can be more dangerous if you don't get your head right, in my opinion. Mark, I love this room and all you do for us. I'm looking forward to calling myself a full-time day trader at the end of the month. P.S. Look forward to any advice you have on the above. Thank you and God bless. Okay, so always love this picture. I keep it right on my thing. There's the dude, beautiful wife, even more beautiful kids. Look at those beautiful boys. Oh God, those kids are completely edible, delicious, beautiful, beautiful boys. And very lucky dude. So yes, I do show off that picture because I absolutely love it. Keep it right. I love pictures with kids. You feel me? Just one of those things. Okay, going back to it. So that's what actually made you tilt. The fact that you lost a consistent, predictable income when you told your boss you were leaving, because now you're not going to have that predictable income. You know you're a good trader. I know you made 25,000 today, and I know you've had a very rough week. I'll tell you this. I'll tell you this right now. Um, it's one of the biggest problems that we had ever since the majority of the people here started becoming consistently profitable from what, I see. It's kind of weird how, for the majority of my career, the biggest problems were people consistently losing money or treading the wheels and slowly bleeding down. That used to be the thing. See, the only difference is I might be a guru and talking about it. Every single other guru here, there, everywhere has this problem. The only difference is they don't address it. They feel it makes them look weak by saying that the majority of the people who follow them lose money. I had to come to terms with that, and that's what made me change to start doing what I do now. And no, following me 5 years ago wasn't the same as following me today. Following me 2 years ago wasn't the same as following me today. I changed massively. I evolved. And, made a life changing difference. And after I evolved and I started seeing the majority of the people around me start making like stupid amounts of money, um, it was kind of weird because sort of new problems came out. People were afraid, is this going to last forever? Is trading really this easy? You know, I was like the biggest imbecile ever, but I was young, so it was an excuse to be stupid. When I was 19, when I was 19 and I was trading and um I'll date myself. I was back in 99 and we were trading with fractions and there were fractions back then. It took 16 levels to move a stock a dollar because it was in sixteenths. So now it takes 100 levels, even if they skip in between, like 1 penny, 2 penny, 3 penny, all the way up to a dollar to go from to move a dollar, right? And obviously it moves real quick. You don't really notice it, but back in the day it was 16. It was sixteenths, teenies they called them, to move a dollar. And what I was able to do back then was there were huge spreads in stocks. Some stocks had like a dollar spread. And when you were looking at the print box, meaning where the stock was trading, let's say a stock had a, $150 bid and $151 on the offer. So it's like a dollar spread between the bid and offer. You would see in the print box people selling at 150 while people were buying at 151 back at the time. And I figured it out. It didn't take rocket science to just say, hey, if I buy at 150 and sell at 151, that's a dollar. That's a full dollar profit. And if I trade 500 shares, that's $500 every time I do that. And that's how I made $1 million. Crazy, right? With 500 share positions, just like that. And I was dumb. I blasted away, buying the wrong things, dinners, extravagance, everything. I was 19 and stupid. You give a 19-year-old, you give a college dropout that much money, excuse me, you give a college dropout that much money, and they do stupid things with it. Or at least I was. I think most would in my position. Because you're sitting there, and even though you do stupid shit with the money, you're thinking there, oh, this is going to last forever. And that's what you think. Oh, I'm always going to be able to do this. Then all of a sudden trading changes, it shifts, and then you can't just make money like that anymore. Everything changes. That's why education has to be dynamic. It needs to constantly evolve with the market. It's like you go up to somebody and you say, all right, lady or gentleman, sir or ma'am, do you believe the market is constantly evolving? And everybody will say, yes. Do you believe that the market over time is constantly changing? Yes. So why do you think spending money on an educational course is going to answer all your problems forever? Especially given the fact that all these educational courses that are well polished and touched up are all bullshit because they're all so old. Really. Oh, they're touched up. There's nice slides. Anybody who had the time to do all that shit for an educational thing is teaching you things that used to work. Do you understand that? I mean, the market is constantly changing. Like me, I'm constantly evolving my strategies. I have updates. There's new dates where I literally take it to like the date of where I update it. It's crazy. Like that's what you have to do. That's what you have to do. So like even like on my latest one and done, you'll see I have like versions over here. You'll see like version BM 3.0, which is bull market 3.0 if you didn't know what BM stands for. That or bad mannered. January 10th, 2021. My strategies are updated to work in today's environment because shit that was uh I love these I love these a-holes who are like, "Oh yeah, well, I'm a profitable trader." Oh, well, what did you do? Oh, that was the course I took 10 years ago or 5 years ago and it helped bring me to the point of where I am today. And it's like, okay. Hmm. Imagine, let me ask you a question. Would you rather have a strategy that is working 85% of the time in the past 4 weeks, or would you rather have a strategy that is working 50% of the time in the past 10 years? I think the answer is obvious. Something that is created recently is more likely to work. That's why I don't charge you for my education, because people who do that are robbing you. Because it's going to change really quickly. So what are you going to do? You're just going to pay again? And they're too lazy to update it. They're like, all right, just keep pitching it. It's already well done. It's polished up. It's fully recorded. Just keep charging for the recording over and over again. We'll show you my 5 favorite chart setups or strategies, and you do them over and over again. And guess what? You'll never have to work for the rest of your life. It's all there. Why are people so stupid to believe that? I'll tell you why. Because it's not your fault, by the way. You're injected with a false sense of confidence. You're injected with a false sense of confidence. Traders who are going to remain successful, you have to fight for constantly. And given this gentleman's email, going right to it right now, given this gentleman's email, this is one of the top problems I have from people. They're consistently profitable. They have a bad day. They're afraid they're going to, like, this is the number one problem people have. And what threw you off was you were thrown a psychological wrench. So there's good news. There's good news and good news here, in my opinion. And again, I'm not a certified psychologist, but I've seen this shit happen enough where I think I have a good grip on what's going on. Do your own due diligence. So what happens is right over here, where you said, to make all this even more toxic for me, this was the week I told my boss I was leaving my job. So when you did that and you had two kids, you were like, I don't have that consistent income. I don't have that consistent income. That threw you a psychological wrench. If I knew that about you, if you told me, Mark, I'm leaving my job, I'm going to tell my boss I'm quitting, I would say don't trade or tier all the way down to one contract until you get that out of your system, especially with two children that you're supporting and taking care of right now. Hindsight, I know. But everything you're saying here, you have an amazing wife. She is telling you exactly the right thing. She's putting you right back on track. You're a very lucky man, and I think you're going to be good, is my humble opinion. Thank you for the email. Next email. And right, by the way, right now, he feels like $1 million. He felt horrible this entire week. See, what happens is if he made money on Monday, if you took his winning $25,000 day today and switched it with Monday, and he made 25,000 on Monday and then had all the same losing days up until now, he would be in a much worse situation than he is right now with the $25,000 day at the end because now, whoa, auto zoom. Now he has all his confidence. Understand? Whoa, zoom. Whoa, webcam. Whoa. Hello, Mark. Your so-called triggers helped me almost quadruple my account this week. Holy shit. I started this week with $31,000 and ended with 120,000. The triggers are real and they're spectacular. Please follow all Mark's rules and there is no way you can fail. Thanks for all you do for us and happy birthday. Some things that work for me. Stop focusing on the P&L. Trade smart. Take quick losses. Next, follow a 3-second exit rule based on the ask. Right. So one of the biggest things that so I've created a risk reward system that, in my opinion, destroys the industry average. You see, when people come to you and they're telling you about, risk one, make three, risk one, make two, risk one, make four, risk one, make 10, the old risk X to make a multitude of X, you see, there's something wrong with that. There's something really wrong with that. You see, it's just my opinion. Don't take my word for it, but there's this thing called the American Psychological Association, and there's two people. I don't know their IQs. Maybe they're idiots. They're called Kahneman and Tversky, and maybe they're, some of the most famous psychologists on the planet, but don't take them so seriously. Do your own due diligence and homework. And they created something called the loss aversion principle. And it was back in 1979, before all these gurus came out with all their bullshit. And what Common and Tversky said is they said, for example, people should avoid lotteries, which give a 50-50 chance for gains and losses, because the negative repercussions weigh heavier than the positive ones. According to Common and Tversky, the negative repercussions are 2.5 times worse than the positive ones. So you're destroying yourself psychologically. And the irony behind that is if you ask traders, what is the most important factor of trading? Just about every single person you will talk to, they're not going to say good technical analysis. No, they're going to say psychology. So the guru who's showing you 2 to 1 risk reward and telling you to bet 50-50, back in 1979, when some of these gurus were just a twinkle in their parents' eyes, Common and Tversky is like, don't do that. You're going to destroy yourself. And then you look and you see, why is the 2 to 1 the gold? Every scumbag does it. Why is 2 to 1 the gold standard of the industry? Why? Why, when you could go on Google and look up Common and Tversky's risk principle? Do it. Do your own due diligence. And ask that scumbag who destroys the lives of the majority of the people around them. Ask him. Say, dear sir, Common and Tversky thinks that your risk reward mechanism is full of shit. Do you have anything to say? You know what they could do at that point? Flash you a P&L, spread their legs. Look at my junk. You like it? Don't question me. Just shut up and listen. Maybe that's why most people fail in the industry. Maybe it's time to step up and do things differently. Maybe it's time to actually change your life. Links in the description. Moving on. So what he's saying is follow a 3-second exit rule. So this is my part of my theory. His risk reward is based chronologically, which is based on time. It's a chronological risk reward mechanism as opposed to a numerical one. Trading isn't just all about math. Many, and I'm a math nerd, most people think it's just based on math. I'll prove it to you. Okay, it's just based on math. All right, I'm risking 50 cents and I'm trying to make $1. I buy a stock at $20. I'm trying to have it go to 21. My stop loss is $19.50. So you buy the stock at 20. And then it goes to 1975 and then 2010, 2030, 2040, 20. Are you holding? You're supposed to let your winners ride, right? That's one of the other bullshit sayings: 2050, 2060, 2070, 2050, 2040, 2030, 2020. And all of a sudden you're in the trade for 3 hours. What do you think that's going to do to your mental capacity when you're watching your trade bounce up and down for 3 hours? You think it's going to have any negative effect on you whatsoever? Some people can do it, and they do it well, and I respect them. Most people can't. Fact. Welcome to life. Welcome to life as a trader. So what's working for him, how he quadrupled his account from 31,000 to 120,000, is he stopped focusing on his P&L and he's trading smart and taking quick losses. Get comfortable trading puts in Tesla and Amazon using the SEC strategies. They work really well. For suspect positions, when front running, I take a third of the position when the EMA hits and the S stops dropping and starts moving up, and 2/3 about 10% away from the trigger. So he's just basically sharing where he enters. For 5 out of 10 setups, so he has his own rating systems, I front run 50% when the EMA hits, and S stops dropping and starts moving up, and add another 50%, around 20% away from the trigger. All right, so he's estimating, he's basically showing where he front runs, which is a strategy we do. Set limit order for 2/3 of your position for $1 gain in Amazon and 50 cents gain in Tesla. If not triggered, just cancel and pretty much brick toss, which is marketing out. Take a quick exit when the ass stalls or drops. You can always re-enter. Multiple few cents loss in Tesla or any stock is awesome, as one win is more than enough to cover multiple front run losses. Note this works only on tighter names, and Amazon doesn't work for Zoom, Roku, and Netflix on slow days. So it's also personal. Not all names are created equally. And I agree, Zoom, Roku, and Netflix are much harder than Amazon and Tesla. I have no idea why. It's just the way life works. No overnights if you don't throw away money. No overnights if you don't want to throw away money. That is what he meant. Appreciate it. Congratulations on quadrupling your account. That is effing awesome, man. I am so proud of you. Great job. See, it's kind of funny because I guarantee you right now, you guys are sitting here watching thinking that I cherry picked all these, but these are coming in like this email right now is 20 minutes ago. I've been talking to you guys. I've been running this video 45 minutes. There's no way I could have gone through this email. This email was literally written 20 minutes ago. And I'm moving down, so I'm going top heavy down this time. Good evening, Mark and Bandits. I know we're getting a separate idea box, which is awesome. How about another box that constantly has a poll and polls running for how well SSE and other platforms are running? We could discuss that. Example 930 to 935, 61%. I see what you're saying. So, um, yeah, I guess we have a priority list. I guess if we could have everything, um, it's kind of weird to have a system because I hear what you're saying. I think we just openly discuss them in the room. So what I've been doing is I've been like buying like one share of Intel and selling it and just seeing like how fast the lag is. So I've been doing like dummy trades to test that. But I understand for some people it would be very hard to do a dummy trade. I feel you. Truth is, you could probably find like I could probably find a name that trades at like I don't have to do it with a name like that. I could take like one of these like 30, 20, 30 cent names and just buy one share and sell one share with a market order. Like one of these names that do like tens of millions of shares of volume on a normal day, and just like buy one share and sell one share and take a gain or loss or whatever it is, and just look like lose, a fraction of a penny on one share just to see if it works. That's probably the smartest thing to do instead of Intel. I think that would be actually more effective because I also think it depends on where you are. If SSE works for me, it might work for a lot of people on the East Coast, but the West Coast might be different. And some, like just for example. hmm Love this room. Sending love and peace to everyone here. Having a great day. All right. hmm So yeah, so we have been handling the platform issues great with me just doing becoming sort of like the guinea pig for us and just throwing in a share and losing. All right. Another difficult week. Another difficult week is the title of this email. Hi, Mark. Another difficult week for me. Many sus setups and sus option spreads. Many didn't follow through right away. Often the trade didn't work or have a larger drawdown, which caused us to exit before it worked out. Despite the best week of Wall Street since early November, it seemed to be one of the harder weeks for me. I did not have a losing week, but as the week came to a close, I found it harder and harder to execute the trade. Fear of being stuck in the trade due to platform issues, many fast exits with a small loss, which turned into death by 1,000 paper cuts, and then not taking trades, fear of paper cuts, but the trades turned out to be working trades. Does this mean for educational purposes only, we must take every trade that fits C strategies regardless of sus? No, I know you have more of the email, but I'll say he's basically asking, you know, it depends what's being suspect. Is it the technical parts? Is it the platform issues? I know it's very easy to talk about platform issues after the whole Wall Street bets thing, and it sort of like took out the market by the kneecaps, I feel. So like I understand what you're getting here. I don't want to turn it into an ongoing thing if it's more of a fluke event. I'm not saying it won't happen in the future again. You know, I'm not. you shouldn't have to take every C strategy. You should know by now what you do well. Like, what do you do best? What is it? That's your answer. Not every C strategy. I mean, already just the way you're approaching it is incorrect. You're not supposed to do everything. You're supposed to do what you need to do. And the only person who has that answer is you. We show you how to figure it out too. I don't just come to you and talk to you very vague. So I don't know what do you do best. Now, let's say you found out what you did best. All right, it's the Mark 1 and know your limit 8 on the 1. Let's say that's what you do best. What should you do then? Um, what should you do then? Those strategies on the names in which you do well with. So, like for example, somebody does well on Amazon and Tesla, which is very common, but they'll struggle with Roku and Zoom and Nvidia, which is also common. That's one strong way to approach it. Lastly, I want to let successful members know that we struggling peeps really appreciate whatever they can help out with their successful strategies in executing C strategies. C strategies are the free ones, the free education we offer here for those watching. For many of us struggling traders, any help they can give us to get to similar consistency at this point will be a real life saving at this hard time. Sorry for any typos or bad grammars. In a hurry to submit this email. Regards, struggling member. Okay, so my advice to you, instead of just saying you had a hard week, why don't you show me where it was hard? Here are all the Mark ones, one and done's this, I tilted here, this was a news flow play, this wasn't. Why don't you break it down? That's going to be the number one thing you could do to get to the next level. Okay. Just going to refill this adult beverage, and I will be right back. In the meanwhile, what I will do is I will leave a screen up and share with you the Mark 1, our newest Mark 1, if you are watching. Um, I don't know how much money this has been responsible for making me this week, but you could read it, screenshot it, take a look at it. I'm going to fill up my glass. I'll be right back. Okay, thank you so much for waiting. I appreciate it. Thank you, muchos. Cheers. All right, let's uh let's go on. So yeah, look, the best way for, and again, a lot of us do come out and we do offer help, obviously. The best way to get to that level would be for you to share where you're struggling. So you know, all right. You say like for example, you didn't have a losing week, but as the week came close, you found it harder to execute trades. You're having all right, some system issues, some system issues. Really, the way I do it is I literally do one share positions, and then I try to guinea pig myself. In terms of the C strategies, you know, it depends. I wish you gave me more information. I wish you gave me more information. And the more you share with me, the more I'm going to be able to help you. All right, my brother. For people that are having problems with SSE trying to close trades, here's what I found that worked for me. 100% win rate. Once I open a trade, say for a one and done, when I try to close it and it populates there are not enough shares ever and won't let you close the trade, just smile. Here's how to handle it. Hit the print screen button to copy the bid and ask screen at the moment the error occurred. This will give you the bid ask pricing. You now have the lowest price you will be filled on. If the price lowers, let it ride. No risk to lose more money. Wait for it to move back up, close out later with more profits. I see what he's saying. If the price increases above where you first attempt to close the trade failed, wait for the platform to recover. Many times I'll make 10 to 40 cents a contract more once the platform recovers, as I'm forced to hold longer than I would normally hold and I can limit out with extra profits. If the price never recovers by the end of the day, exit out and call Schwab and let them know the error occurred at example 9:33 a.m. Tell them where the bid and ask pricing was when you first tried to get out. Send them your screenshot if you have one. They'll create a ticket for crediting your account with that initial price fill. I've won on all 7 of my requests, so smile, don't panic the next time you try to get out of a trade. The error shows up that there's not enough shares to close. Many times you'll make more on the trade. Hope this helps. All right, do you guys understand what he just said? He's basically saying you buy a stock, your position window doesn't fill. You click sell to close. It says you don't have enough shares in your account. You clearly bought it, but now it's saying you don't have enough shares in your account. You hit print screen. Now, I'll tell you right now, there's people like, so for example, I could have done that today. I mean, I would have probably been credited about $3,000 that I lost in the morning, trying it out where it wouldn't allow me to exit until later while I was up money. Um, so there are enough people like me who are not calling in and complaining. And on the flip side, there are people who will actually screenshot it and get the money back. So, yep, appreciate the email. That's one way of doing it is, holding those responsible, um, holding those responsible for everything. Next email. Another title, SSC issues. Hey Mark, first week using Street Smart. For the most part, I love it. The fills are 100 times better than Thinkorswim. But what is up with these positions not loading, and then I'm not able to close them right away? This has happened, it's funny, right after the last email, right? This has happened twice this week and caused two larger than average losses for me. Is there a different way to sell my position if the sell to close button doesn't work? I contacted Schwab and it'll be investigated, and I'm hopeful I'll be credited back because in the order messages they can see after I was filled, I tried to close 4 seconds later, ended up getting filled 2 minutes later. For some background, I'm Ethernet hardwired on a brand new gaming computer, so the connection isn't the problem, I know. I'm done trading for the day because I know I'm triggered right now and don't want the toxicity to hurt me even more. I don't mean to rant because I know other people are having technical difficulties, but I can see I'm starting to become more consistent in my data, and to have these problems mess it all up is killing me psychologically. I'm curious, has this happened to you? Yes, today. And they have credited you back? Yeah, sometimes. Is this ongoing or just the past 2 weeks? There's a lot of problems for the first 2 to 4 minutes in the morning. In terms of what happened last week, that's an exception where it screwed up to like 10:15, 10 o'clock, 10:30. That's the exception. Um, these issues are making me question if it's even safe for me to trade until the system's updated. I would like to thank you for bringing self-imposed toxicity to light. If it wasn't for that, I would probably be revenge trading right now and making it even worse. I also want to thank you for doing all you do to help us, including listening to our problems. You are truly a great mentor. Thank you for all your time. Thank you for the lovely email. Look, my thoughts here is my thoughts here ultimately is a lot of the look. There's pros and cons to everything you do, and what I've been doing is I'm thinking of getting another software to trade the first like 5 minutes of the day. I'm serious because like that's what it's coming down to. And other than that, I love Street Smart Edge. It makes me a ton of money. It makes me a ton of money, and I love the platform. And I hear what you're saying. My advice: chill for the first few minutes, like literally 2, 3, 4 minutes, and don't do anything. I know there's a lot of opportunity sometimes in those 4 minutes. There's opportunities at every minute of the day, but it is what it is, and I don't know how long that will or will not last. Attached is an example day of what I was trying to explain in my email. I should have included it before. All trades were executed Thursday between 9:45 and 11 a.m. All right, so here is the previous email that should be on top of this. 1 second. Because I was going from the top down, so I missed your older email instead of going reverse. Mark, while January was awful for me, this week of February has been better. I'm learning how to deal with a cash account, made a few mistakes, but had some profitable days. I have a repeating mistake where I make money on 5 or 6 small trades, then take a Tesla or Amazon trade and lose a lot comparatively. Is this a typical result of some mistake? Well, here's the thing. I don't know what your 5 or 6 small trades are. So when you say 5 or 6 small trades and then take a Tesla or Amazon, what names are you trading which you're making money on and then losing on Tesla or Amazon? Is this a typical result of some mistake? Probably. I just don't know what it is. What strategy were you trying to apply? I have seen this happen several times over the last few weeks, losing on a bigger trade. And by bigger trade, I think you mean on dollars, not contracts. So I think you mean also the bigger names like Tesla and Amazon are a more like pricey name as opposed to Apple, which even if it has a higher market cap, it's a tighter, smaller dollar valued name per share. Losing on a bigger trade depletes buying power and the amount overwhelms the profitable trades. Thanks for all you do for us. It's making a big difference in my life. And then she shared a spreadsheet. I'll paint and pull that up so we can blast it up. Let's see. All right. So I see your profit and loss in now. All right. So you lose on Airbnb. That's a very hard name to trade with options. I would not trade that anymore, honestly. Airbnb is a name that's very dangerous to trade with options. I would not do fuel cell anymore. That's a very dangerous name to do with options. What you're going to see me do here is I'm just going to cross them out. Boeing's not that bad. AACG, I don't. Oh, that's shares. If you're doing shares, that's fine. I was about to say no AACG. JP Morgan, that's not an easy name to do with options. It's not that horrible, I guess. Rocket, I guess you could, I'm not looking whether you made or lost. I'm just looking at the name. Goose is almost impossible. I saw you made money. Would not do Goose. BLDP, I would not do BLDP. So these are names, I'm just crossing out names that are hard to trade via options when you traded options. TAK overnight. That I mean, I don't know what that is, but I don't like it. That name, I see you made money on it. It's not about making or losing. Workhorse is all right. Rocket's all right. Workhorse is all right. NYMX on news, you did 100 shares. That's okay. So what I did right here is I just started deleting names that are hard to trade with options. I literally took your list and just started deleting names. And if you just look over here at your profit column, you'll see you'll see how far it goes down. Where if I just were to literally add that, if I were to just literally add that, you would have saved a lot of money. I mean, if you just literally eliminated the names option wise that you traded, which I consider very difficult names, I want to actually add up how you would have done because my point is I think there's an easy fix here. Like I would not trade, I mean Airbnb, I don't I have traded options. That is a very difficult name. So I would just say, all right, 40 bucks. Just add them up here. 40 bucks plus, let's see, you took two contracts there. 40 bucks plus, you did two contracts for 10 bucks. Plus, you made 8 cents on 200 shares. 16 bucks plus 20 bucks on JP Morgan plus made 11 cents on 200 shares. That's 22 bucks. Plus you made 20 bucks on Rocket. You lost 6 bucks on Apple. You made 20 bucks on Boeing. You lost 16 bucks on Workhorse. You lost 36 bucks on Rocket. You lost another 18 bucks on Workhorse. You lost 16 bucks on NYMX. And if you just followed that by just eliminating the names that I considered stupid via options, you would be up $56 on the day. Now, looking at what you did, that would have definitely fixed your P&L. The big problem I see here is just literally your name selection. Ballard Power Fuel Cell Plug. Nope. Not easy. Not easy. Not easy. So I like when I see these numbers because I think there's a very eloquent fix for this situation. Now, I can't legally tell you what to do. Um, can't legally tell you what to do. So I would just consider what I showed you. I think that could be a potential solution. Just cross out the stupid names. Mark, can you briefly explain what's a good, better, bad touch of a candle and or it's a wick on the 821 averages, 1 minute, 5 minute candle? Thanks, appreciate you. I'm not exactly sure what you mean by that, but let me try. let me try. It would be much easier if you actually had a strategy. So let's say you have a yellow moving average here. That's an exponential 8, and here's my 21, which I have in blue. Then you have, uh, candlestick, and it shoots up and shoots up. Not that second one. Shoots up here, and then pulls down and pulls down and pulls down and pulls down, here. And this is just a very rough drawing. And then maybe breaks out here. So what would make me not like this test over here of the 8? Well, for one thing, if it went like that, I wouldn't like that. That would look kind of suspect, even though it hit the 21. For me, I want to see, and I'll just put the candles in black just to, I'd like to see sort of a test like this before going up. I don't want to see these moving averages get decimated. I don't want to see something like the candles are going up, then if this and then this happens like that, all of a sudden, or like even that, that just doesn't look right to me. So that's what sort of makes them worse when they hit on whether that's a 1 or 5, whether it's 8 or 21. I think that you basically you basically want to see when you're using these moving averages, you basically want to see it hit. And even if it goes like a little bit under, you basically want to see it like reverse and start like heading back like up. That's basically what you want to see. Hope that helped. Hope that was what you were trying to get at. Hi, Mark. Sharing a couple of items that went well for me this week. First, I improved my Mark 5 5-minute breakout plays. I rarely played those Mark 5s unless they were on a falling wedge and, if possible, had hit and held the ADMA on the 5-minute. This helped my win rate. These were higher conviction than a Mark 5 that was more of a breakout play. I also did not overtrade once the market slowed up. The Know Your Limit 21s were also great plays this week on strong names. Another thing I did this week is size up on the higher conviction play, especially in the morning on the news flow plays like Netflix. I had a good lower 5-figure week this week, so 10,000 plus. Thanks for a great week and the great team play by all in the room. Love this play. Appreciate that. So what he's saying here is, so what he's saying here in this case is he likes the Mark 5 when it looks like this. So let's just do that. So let's say you have like an exponential 8 coming here like that. What he's saying is he likes the Mark 5, when it goes like that, for example, and then reverses and turns up. So he's waiting more for like a falling wedge, which would define sort of that, like the angle there, followed by test and, excuse me, hold of the exponential 8. That's what he likes on the Mark 5s. Thank you. Horrible week. It's the next title of this email. Mark, I just finished a really rough week, down $12,000. I dipped below pattern day trading yesterday, was in Schwab prison today and couldn't trade. Another bad Wednesday ended up following through to Thursday. I tried to chase Tesla and Amazon yesterday, trying to get it back. I had a good Monday and Tuesday. I withdrew money a few weeks ago and I've been struggling up and down ever since. I was way up in November and December, up a decent in January, but not what I could have been because I started taking bigger trades and chances. My wife told me tonight to not be so down on myself and get my act together. She said she won't support me if I don't follow rules and lose money. She said, I better get my chin up, listen to you, and get back on track. When you said Tesla and Amazon was not good trading yesterday on the show last night, I wish I would have followed your lead and not tried. I get stuck in one direction and don't listen. I hit some big trade short on Amazon, then I think it's going to keep going. Today was actually good for me not trading. I followed what you were doing without worrying about the two that haunted me this week. I have to get back on track Monday. I had listened and followed rules and strategies more the last 2 weeks. I would be up huge. Getting down on myself and being toxic does nothing for my future in trading. I know what I've done wrong, and I'm going to learn, correct it on Monday, and get back on track. With my wife's support and your support, how can I not succeed? Um, well written email. I have noticed also, there's two things I want to say about this email right here. I have noticed that a lot of times the price improvement on the options are really bad. I don't know why that is. And what happens is if you mark it in and out on like an Amazon, Amazon sometimes gives you like on the sometimes on the call side too, but also on the put side, sometimes you get absolutely no price improvement. Sometimes you get no price improvement. And it's awful when you have a $1.50 spread because if you buy like 10 contracts and you get a little price improvement on the puts, let's say the calls are $10 by 11.50 and you buy 10 option contracts and you get filled at like 11.30 and then the stock like ticks against you. If you're in puts, let's say the stock goes up, so it goes against your trade and you mark it out, a lot of times they'll fill you at like $10 and you'll lose like $1.30 on, whatever number of contracts you're in, which, on 10 contracts would be $1,300. Um, I find the problem is if you are somebody like me who believes in, you know, in the confluence of technical analysis and the confluence of charts, meaning you have a bullish 1 minute chart, you have a bullish 5 minute chart, you have a bullish 15-minute chart, a bullish hourly chart, a bullish daily chart, everything matches up. The problem with you wanting to short Amazon is not that it won't go down. I mean, look what it did on earnings, which is whatever, whole nother story. The problem is Amazon is just bullish on the chart the entire time. If you literally apply the moving average rules that I created for the C strategies, if you literally create those rules for Amazon, what does that mean? If you literally take Amazon, if you literally take Amazon and you just literally apply the I want all the moving averages, below the stock if I'm going long, and you apply that on the daily, you'll notice the daily doesn't match up for a short. That's why going long in this market is so much easier. I'm not saying there's no money to be made to the short side. I'm saying if you're looking for consistency and you want all your time frames to line up, some charts are bearish on the daily, don't get me wrong, but in a bull market, the majority of them, in this case, in your example, Amazon was bullish. In your example, again, Tesla, there's nothing bearish. That's why even if you look back when I did the video over the weekend after January 29th, when the Qs looked like this, what was and I'll move my head when the Qs looked like this and you had these falling red bars and all of a sudden every bear came out of the woods and they're like, that's it, the market's going to collapse, we're going to do this. The first thing I said, look, we're anything can happen, but we're still bullish. Odds are we go back up. And if you keep thinking odds are we go back up, odds are we're going to go back up, yeah, there will be the one time where you're wrong, but you're going to be right like 50 times. So why? And this is another thing, and I'm glad that you brought up this email because I know Amazon had some bearish intraday setups, but it didn't match up on the daily. There are some people who are so hell-bent on catching the next big down move. This market went up way too much, and I know you are ruler of the universe. You get to decide how far the market goes. You get to decide where the market should be trading in your convoluted head. I used to be that trader. I know what you're going through. I know what you're going through. I get it. I totally get it. I totally get it. I understand everything that you're going through. I understand everything that you're going through. And you just want to be that person who catches the next down move in the market. Instead of saying, I would rather be right 100 times, instead of saying, I would rather just be right 100 times and be wrong once, you, for whatever reason, rather be wrong a bunch of times just to be right that once. And I get it. It just makes no sense. For me, I can't tell you what to do to be bullish or bearish. I can't tell you should go long or short, I won't. But just looking at the market here, shorting is a weird game. I mean, you want to be one of those, small cap gurus who half or more, or 70 or 80% of what they do is play a bunch of small cap names and, be my guest. That's that's that is what it is, right? hmm Aiku is just saying, "Oh my effing God, what Melnick just said hit me like a ton of bricks." Exactly. Exactly. And I was able to resonate with you, and for you to have that moment, Aiku, made it all worth it. All worth it. Hi, Mark. Can you share your Schwab Street Smart Edge layout with me for educational purposes? Um, I'm gonna forward your email to customer service. All right, done. I can't send it to you. They can. Of course, I will not hold you liable. I'm still getting up to speed with the Newsbeat setup and strategies and believe this can help. Thank you so much. Your guidance has been incredible and truly beyond words. Being part of the room has been eye-opening without a doubt. I only wish that I found you earlier, but we'll leave FOMO behind and focus on the future. All the best. It's funny. Yeah, you could have found me a little earlier. You couldn't have found me much earlier because I wouldn't have been the same person. I wouldn't have evolved. I wouldn't have been able to deliver to you what I can today. So to a certain point, maybe. Um, well, there's a lot more emails. I think I'm gonna have to approach them tomorrow at coffee time. But look, I'm gonna go through the emails tomorrow during the coffee time. Look, at the end of the day, guys, I just want to leave you with this thought. I went through some emails with people who are making massive tons of money and are still on track and are doing good. I shared emails with people who are making massive tons of money, fell real hard, and are trying to get back up. And I shared with you emails of people who are still struggling and cannot make those massive amounts of money yet. I showed you, you know, the super successful, continuing successful trader, a trader who is right there next to them but slipped and fell recently, and a trader who has never gotten there recently or yet, right? So I showed you examples of all of them. That is what real trading ends up being about. It always turns into having to help people manage the current environment, whether there's a storm, whatever it is. And through this constant effort, through these constant mentorings, through these constant coachings, the funny part is why mentorships are all bullshits, lies, and scams is mentorships can never end. You ever watch the old karate movies? where like, you know, old wise Chinese man with white beard, sensei takes in a young kid, teaches him the art of karate or kung fu or any other martial art or any of these animes that do it. How long do they spend with the kid, those senseis? Really? How long do they spend with them? A week? It's like, watch dipshit trade for a week, and you'll learn everything you need to know. We're also going to throw 700 pages of information down your throat. Good luck when you go into the real world, but before you start trading and losing money like just about every other person who has taken this scumbags course, can you give us a testimonial to see how you like the course so we can please sucker in more people to buy this course in the future after you lose all your money? Because we know that you're going to be on a death trail. We know you might be one of the lottery people who come out ahead at the end of the day, but we we pretty much are 99.9% sure you're going to fail. You know it's so funny? I you know it's so funny with all these um mentorships and whatnot. If the mentorships came to you and literally said, "Look, you'll pay for a mentorship. And what we're going to do is you're going to open up an account. Check this out. We're going to pay you 150% of the money you make." You might be like saying, like, what? Like, we are so confident you're going to make money. We want you to make all the money in the world. We're doing everything for you. We'll give you, if you're a profitable trader, we'll give you 150% of the money. If they came out and did that, they would still make pretty much the same amount of money. You understand that, right? You get that, right? Because most traders fail. See how that works? They'll have so much money from charging people for a mentorship. Going back to it, mentorships are supposed to last a long time. That old, wise, powerful sensei teaches the kid until they're like a teenager or a young adult for like years and years and years. The market's the same way. It's constantly evolving and changing. You need to constantly be updated. People are delusional if they think, all right, somebody's going to show me what to do and I'm going to go off on my own. What do you think is going to be more effective to find plays in the market? Thousands of trained eyes, or you sitting there with a couple people or by yourself? Do the math. So what I'm trying to do ultimately, if you're watching this now, I'm trying to change that all. I'm trying to change that all. I'm changing myself. I'm trying to do a better job. I know I'm not perfect. I know I don't do everything right. But you know what? You know what? I'm one of the honest people out there. One of. Is there anyone else who's brutally honest like this? Is there anyone else who's reading raw emails talking about people struggling in their own service? Are there people out there like that doing that? Because I don't see them. I just see a bunch of bulletproof, bullshit artists walking around just talking, you know, just shooting the shit. And they don't even have to bullshit. They just have to cleverly ignore the people who are struggling. Well, yeah, this is what I do here. I do A, B, C, and D, and trading is about, the process and the psychology, and this is how I found success. And it's like, okay, that's lovely. How are you helping the 98% of people failing you? And that's why nobody likes the questions. That's why it's not a sexy topic. There are a lot of people here, and I see, hundreds of you here still, like between the room, YouTube, and Facebook, you know, maybe you're just done, as they say, drinking the Kool-Aid. And I'm not coming to you as a person saying everyone succeeds in my room. I'm not. I'm showing you people who are in my service, in our service here, who are struggling. And you know what? I'm proud to show you that. I'm proud of it. Why? Because maybe through their struggles, I can talk about something they're struggling with that will resonate with you, the viewer, and bring you value. If I just showed you my P&L and said, swipe your credit card today, a lot of you would do it. I'm not looking to pitch you. I am looking to change your life. I don't need you to swipe your credit card for me. The question is, do you need it? And this is what you get. I wear my heart on my sleeve, as they say. I don't promise you something that you won't get, quite the opposite. I'm the only person, here, there, everywhere who gives a shit to be doing a live video with raw emails at this hour because I know you need to unwind and I know you need to leave this week with a lesson, something new, some form of renewed confidence, some aha moment, something that can help you get to the next level, whatever it is. And I understand the importance of that. That's why these videos are ultimately created. So, ultimately, from the bottom of my heart, I hope you guys enjoyed. Hope you guys enjoyed this little show we did here tonight. This little hour and a half plus show. Happy trading, make money. I'll see you guys for coffee time tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful